What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, we're talking about Ambarella, ticker AMBA. So, I'm going to wait a little bit for... Look at the chat room. Look at the chat room. All you guys in the chat room, thanks for being on the chat room, A. B, if you're not already in the chat room, check it out. The link's here. This echat.co/room/213012. And I'm going to put this in our YouTube chat over here. Chat room always open with the link. So you guys have that here. And again, we're going to slowly try and transition so we have kind of everything in this chat room. And the reason being, at the end of our YouTube chat, this is gone, right? The YouTube chat is gone and it disappears, whereas this lingers, right? We got stuff from way back. So, and then there are probably ways where we can make it stick around longer, and we'll look at some other features to that too. But for now, this is our new experiment that we're messing around with here at Zach's Live Trader, okay? So today we're going to talk about Ambarella. But before we do, I got a little bit of a story, okay? I don't know about you guys, but I'm kind of like, I don't want to say like a consumer advocate, but I kind of am in some regards. Basically, the way I look at it is, if you have a place that has like a homogeneous product, right? So everybody's selling the same stuff. The only way they differentiate is with service, and then when service isn't good, it upsets me. But something happened to me. Actually, my girlfriend here the other day. So, got a flat in her car. And I know this has nothing to do with Ambarella, but I got a second while I'm waiting everybody to come in here anyway, so I'm just going to go ahead. So, girlfriend comes in, got a nail in her tire. I can't go with her because I'm working to get it fixed. I send her to this place. I have him call me when she's there. Guy says there's this promotion, yada, yada, yada. I'm like, all right, where's the tire out the door? He tells me $173 out the door. I'm like, all right, run it, right? So then she comes back, and I'm looking at the receipt, and on the receipt down here, there's a little thing that says road hazard protection. That's another $17 on here. So instantly, I'm a little miffed because nobody said anything about road hazard protection. And if you charge me for it, then it's optional. And I would have bought it. Absolutely, I would have bought it. But they kind of snuck it in there. And the other reason I know they snuck it in there is I don't have a little pamphlet detailing the coverage of my road hazard protection. So after this video, guys, I think around lunchtime, I'm going to take all 6'3", 240 pounds of myself. I take a little ride over to the tire shop and have a little discussion with my friend Hermes, I guess is his name, that's over there. And just wonder why he's trying to slip one past the goalie. That's my little story for the day on how I'm going to go and have a nice little discussion with the young man at Tires Plus in North Miami Beach. I wonder how that one's going to go. I'm sure it's going to go fine, but I'm just going to wonder why they're trying to, why are you trying to pull one over on my girl? Like that when you knew I was asking specifically what all the pricing was, and out the door you said $173 for the tire install, not additional warranties and stuff, which again I would have paid for anyway, of course, because with her she's a tendency to run over nails and screws and stuff. I don't know how she does it, but she certainly does it. Okay, now back to something completely untire related. Ambarella, my friends, ticker AMBA. So if you don't know about Ambarella by now, I guess the easiest way to understand Ambarella is for a while, their main customer was GoPro. And we can actually see, I'll add a comparison chart here. Not to the S&P 500, but we'll put GoPro on the Ambarella chart. Pretty cool, huh? So the bar chart here is Ambarella, and the line is GoPro. So as you kind of zoom in here, you can see they track pretty darn well together. And that's because, again, Ambarella's main customer for the longest, only customer pretty much by revenue, was, in fact, GoPro. Now, it's starting to split a little bit. They're getting a lot more of their business outside of GoPro, which is a good thing. However, it can't come quick enough. So what's happening is they're still kind of tied to GoPro, right? So that's the scenario. But I thought this was cool, just to show you the comparison. And I mean, early on, from the GoPro IPO, it was just lockstep. And then since then, you can see the divergence, but still same kind of overall trajectory. Obviously, GoPro percentage-wise has done much worse. But here you can see the scale remains the same for both of these companies. So while GoPro's off, 84%, Ambarella's still off 46%. And this is from 2015, summertime 2015, about 2 years ago. Sorry, guys, I'm going to be doing a lot of this throat clearing. South Florida, man, getting me. Okay, so there's that. And I see in the chat, Mr. Newman throwing up a quick little question about Nikkei and the SPY, which I like. To a certain extent, of course. But the Nikkei certainly has a mind of its own. So we're going to put, so I typed in, I have Nikkei here. And you guys, if you're using freestockcharts.com, you just go to settings, comparisons, and in here you could throw in any ticker that you want. So we'll put SPX in this case, and you can see, right? So, yeah, I mean, with all equities, there's going to be some sort of correlation, right? Is it perfect? No. But there certainly is. And then something else to show you, though, is rather than the S&P, let's look at dollar yen. So this is dollar yen in the Nikkei. Tracking pretty well also. So I would say it's probably a fusion. And the two main determinants are dollar yen and S&P. And you could use that sort of composite together, and that'll probably get you close to the Nikkei. Okay? All right. Back to AMBA. Settings, comparisons. Let's get out of here. We could go back to the GoPro. Let's just go back to the GoPro. We'll leave the GoPro up there. All right? Just so you can see, especially recently, what's happened. Bouncing around. Through. Yeah. All right? Okay. So let's start digging into the price consensus and EPS surprise chart here on Ambarella. And again, guys, as we're talking, most of you are already signed up for the Zacks Live Trader Premium. But if you're not, shoot me those emails, livetrader@zacks.com. We'll show you how to get hooked up on that. Because the new fantastic stuff that hasn't even been unveiled yet. But like the morning after tomorrow is just for the premium folks, which is great. And I think, honestly, I know I love doing this analysis and stuff, but that morning after, man, we find some real awesome trades right there, real time. And I think that's something special. And we're looking to expand on that a little bit more the morning after. Okay. LiveTrader@Zacks.com if you're not already hooked up. But I know most of you guys here live are. Price consensus EPS surprise chart. As always, the black line corresponds to the right y-axis, which is price. The green arrows are earnings beats. The red arrows, there are a couple of them, are earnings misses. The multicolored lines represent what I like to call the evolution of our Zacks consensus estimates over time. And charts like this I love, because they perfectly outline what's important to stock price. There's two things. I mean, when you boil it down to the simplest parts, right? Simplicity, the KISS method. A stock's price equals its valuation, or the PE, right? times earnings. So in order for a stock price to rise, one of two things is happening. Either the PE, I can't even draw PE. Either the either the PE is rising. I gotta be able to do that better. PE is going up, or earnings are going up. Sometimes you have both of those happen at the same time, which is great. So in the case here of Ambarella, this huge spike upwards was caused by earnings, which is great. I'm working on something that's going to be epic. We are partnering up with NinjaTrader. I don't know how many of you know about NinjaTrader, but that's really primarily a futures platform, but we're going to make it much better. We're going to have it, you can use it with equities and it's free, okay? For end of the day stuff. It's totally free, which is awesome. But anyway, I'm going to work on something that is like a difference, a smooth difference between where the price is and where the estimates are. So that when you see huge deviation from the price and the estimates, it'll kind of pop up on a radar. That's something I'm going to do. But anyway, in the meantime, here you could see nice correlation with, or at least the stock, correlation is a bad word, I suppose, here, but the stock moving up in step with these earnings. And then something happens right here in the middle of 2015 where things just go awry, right? And these estimates just get ugly. And the stock goes from $1.24 all the way down to the mid-30s. Because these earnings estimates came crashing down, right? So I don't care about the rearview mirror here. I'm worried about what's happening right now. And what's happening right now is you still have a situation where, oh yeah, we're promising earnings growth, and then, the rope-a-dope. So now, if you look at earnings currently for Ambarella, the last time the estimates were this low, the stock was at 30. But the stock's at 60. So what gives? Let's dig a little further. Details estimates page on Ambarella. We can see right now it's exact rank number 3. Hold value F, growth A, momentum A. At least they're true. I like seeing this. Value F, growth A, because that's really what it's supposed to be. And that's because they're trading, 74 times earnings, right? So you better have some growth. That's how you guys should see this. Don't ever just look at a PE and go, nah, that's expensive. You can't do that. You got to look at it and think, okay, well, what's justifying that PE? So it's a conversation starter. Now we got to go and look for the justifications. And the justifications should be in revenue growth. 10.82% current quarter, 11.38% next quarter. Current year is flat. Next year it's going to get better, guys. I promise. Next year, 12.83. So that is not spectacular earnings growth, revenue growth. No, absolutely not. Then let's look at EPS growth. EPS growth is even worse. There is no EPS growth. Current quarter, a contraction of 33%. Next quarter, contraction of 53%. Current year, a contraction of 52%. Next year, though, we're going to get 3% growth. Now, let me ask you guys, is 3% EPS growth worth 74 times earnings? That's the risk here. That's the huge risk that you have in Ambarella, and that's the problem with this chart going from all the way up here, boom, to down here, okay? Is that growth is evaporating, and that's not good. This is a company that's supposed to be growing. So now you're telling me it's not really growing, so I can't justify these valuations. That's a problem. And if you look at the surprise history, they've surprised. They've had several beats, which is good. You know who else beat? Michael Kors beat, right? And the market certainly didn't like that. So let's go ahead and dig in here. Let me get some more details on the revenue front here. And we can see sort of historical revenues. It's almost like people are thinking that this is the company with 30%, 38%, 45% revenue growth here, right? And I think Jeff in our live YouTube chat, I think you accidentally rearranged the letters on your keyboard because you've been typing gibberish since your Morning Guys comment. We don't know who Strange Ali is. And I don't know what senpai for the diag means. That must be a different language. Speaking other languages. Dropping some Japanese on us or something. I thought that was domo arigato. Anyway, so 30s, 38s, 44s. Boom, line in the sand. Now all of a sudden, doesn't look so growthy, does it? I don't know. This thing is why? Am I missing something? Let's look at EPS too. We could see this on the EPS side. And what are we seeing here? Of course, not food and restaurants. This thing always defaults. Let's go ahead. Bring up my proper sub-industry, not that it matters. And here we look at EPS, and last year is negative 32%. So a contraction there, and then another contraction, and then a little bit better. Guys, I think you're still trying to diversify away from GoPro, and it's not there yet, is what this looks like to me. What has the Zacks ranking has been on this one? And you'll see spats of negativity. Most recently, really just been drudging it up. And you could kind of tell that from the price consensus EPS surprise, right? Had a little bit of positivity as the stock was going up, runs out of gas, coming down. There you go. There's the scenario. Now let's go ahead and pop up this consolidated surprise while we go back to the options chain. And you guys know I like to use bar chart here because it's nice and simple and everybody can see it. Now these guys are going to be reporting after the bell today, so we don't have a lot of time. You got to make your move quickly. All right, so 59.34 is where it's at. Switch it from the stack to the side by side so we can get a clear picture of what's happening over here at Ambarella. Thank goodness. Thank goodness for all these strike prices, right? As opposed to the problem that we had, yesterday. So 59.39. We're going to make our lives difficult and use, let's just say we're going to use the 59.50. That's okay because we'll only have to use this calculation once. Handy dandy calculator. You guys noticed I changed to yellow? Look, I'm yellow now. That's because I changed my desktop to a Sweet desktop. I'll show you later. Okay, so 59.50 calls going 255 by 275. We'll call it 265 all day. The at the money put is 215 by 230, so we'll say 223. 488 is the move that they're expecting here, divided by 59.50. What do you mean? I didn't say. Oh, my numlock. Numlock. Oh, come on. What was it? 488 divided by 59.50. 8.2% move is what they're expecting out of Ambarella. Let's look at the consolidated surprise chart here. So we've got 3 consecutive quarters of negativity here. And that's been coming as revenues have actually come in line. So on some stocks, they look and they say, oh, revenue's good, we don't care about the EPS. That's not what Ambarella is saying to you. Ambarella is saying, nah, man, I care about all of it, and EPS included, or they're just going to be negative no matter what happens. Beat on revs, beat on EPS, negative. Beat on revs, EPS, negative, right? That's no good. And if we go back April 2016, January 2016, I mean, this is the only, here's one win in April 2016, negative, negative. But this is a stock that's been negative, so I'm sure you'd see that. And there's another one. So you've got July 2015 was good. And that was it. So what, 1 out of 7 times it's been to the upside, but it was to the upside big. Not exactly a vote of confidence coming out here from Ambarella. And as far as the 8%, I think that's pretty much spot on, because you got some that are, maybe it's a little bit inflated, given that you've got a VIX, in the single digits. Are we in the single digits on the VIX today again? No, hey, we got a little pop in the VIX. 1044. Pfft. Anyway, given the low volatility environment overall, that's fine. We're all good there. Okay. One more thing. Price consensus EPS, I want to see. So that's immediate reaction, and then does it have a tendency to trend? Little sideways here. Nice trend there. Sideways. Decent trend. So it does trend. They catch some post-earnings drift in this bad boy, so that's good. Okay. So keep that in mind when we're looking at these. So let's go ahead and just see where I know you guys are like, July? I'll be a dinosaur in July. I'm not going to make it to July. That does seem a little far out, doesn't it? But next week is just too soon for me. It's just too soon. It might not be too soon for a credit spread, but if we're looking at a debit spread, something like that, let's see if there's any. There's really not a lot of open interest out here. Let's look at the first week of July. Not too much going on there either. A little bit more. And again, guys, if these are the bids and the asks, these market makers are going to fill you in here all day. I'm just checking here. Just looking for hints, right? You're looking for a big open interest at some level, and what does it mean? And so we still have $55 put has some action, 60s on the call side, all the way to 62.50 on the call side. Interesting. And then it runs up. This is going to be one of those ones where we're going to have to go show me all. And it does. That was actually pretty quick. Instead of side by side, let's go to stacked. So here I was saying I wasn't going to go in this, just a week and a half out, but whatever. If that's where the action is, that's where the action is, right? Okay. Let's start with the bullish side of things. So let's get in this chart and see what bulls can say. 65.39. So basically 65's top end, which is $6 away, further than what the market is predicting. So 65 on the top end. Look at this intraday swing low to 55.59. That was just 4 days ago. That certainly would come into play. The 50 days providing some support here. Not much, though. Teetering on the brink. This looks like it might have been a fib. Of course it was. Of course it was a fib. Look at that. You can't write this stuff. I mean, basically spot on to the fib, 61.8, and they bid it there. So that's 55.50, okay? Wow. I love it when stuff like that happens. 55.50. And what I said, 65 to the upside? That feels like a long ways away. Let's look at this. 59's here. 65 is all the way up here. And there's still some juice in it too. Still trading 93 cents. Seems like a wide spread though. You guys know what I love to do. I love to look at the halvesy. Halvesy here is 62s. The market, again, on the equity side, was pricing in almost $5, right? So, or I mean on the options chain. So the market was pricing in here. We know about the resistance there. So anywhere within these strikes, I think, this is good for, you know, the tail end of a call spread. But getting more aggressive here might not be a terrible idea. Let's price out a couple of these. So a 59.62 call spread looks like 320 minus 180. That's 140. So in that case, you make 160 on the 140, $1.14. All the way out to the 65 is 320 minus 93, or 227. Difference in strike prices is $6 minus 227. You make 373 on 227. It's 160%. It's a bigger win, of course, because it's riskier, going a little further. Dave, I got you. Don't let me run away without looking yen and gold. I love looking yen gold. I do that all the time. So I think this is what I'm going to say, that a bull debit is long the June 16th. 59.62 call spread for, what was that, 140? 140 net debit. Because I think if you're bullish, you can't be crazy bullish. Just because the overall tilt is not looking super bullish, right? I don't know how else to say that. Let's look over here if you want to do a bull credit. And the bull credit is really using this $59 level, or $55.50 rather, I think, for the bull credit. Good news is there's still a little bit of juice down at $55.50. So you can really just do this. Now this is just going to be a 10-cent net credit on a 50 cent of risk. Oh, this is good because I had a question about this. So I'm going to show you guys this. In this case, if you go short the 55.50 put, you're going to get $1, right? Simultaneously going along the 55 put, so you're going to get a 10-cent net credit in this case. The amount of money you're going to have at risk is 50 cents minus the 40, or minus the 10, which is 40. So you can make 25% on this trade. Now, I had somebody ask a question on one of the, I think, was it the Lulu Iron Condor? Might have been. And they were saying, hey, man, I'm only getting $10 on each one of these, and that's 2 legs there, or whatever the number was, $10. It was a small amount of money. And he was saying, like, I don't want to put this on, 100 times, because, then it's like 99 cents a leg. So then that ends up being $2. In this case, he was paying a pretty good amount. $2, it's eating into my $10, so I'm only getting $8. So it was kind of, it's kind of silly. So what I said to him is, what you can do though, is you can just make it a little bit, you can make it wider. So this is the arm of it that you don't, or the leg of it that you don't want to move really, because that was what you based your, you looked at the chart and you said, okay, well, 55.50, that looks like the top of that. So this one you don't want to move, but you can move further down. So instead of doing the 55, you could do the 54.50, you could do the 54, you could do the 53.50. Because ultimately, it's going to be pretty similar. So in this case, let's look at, and again, this is for illustration's sake. If you went short this 55.50, you're going to get $1. Simultaneously going along the 53.50, you're going to give back 65 of those cents. So now in this case, you got a 35-cent net credit. But the amount of money at risk is going to be different. It's going to be 200 minus the 35 or 165. So you can make 35 on 165, 21.2%, right? So still in the 20%-ish range. And the further you go down here, the more this percentage is going to end up changing. The total percentage that you could potentially make is going to keep sort of dropping because the amount of risk you're adding is increasing, but the amount of premium that you're paying relative to that is also staying pretty constant, or pretty strong rather, because otherwise you could just go way further out and just sell here. You're going to get sort of diminishing returns the further you go out, but it makes sense, right? So anyway, so if you find yourself in one of those scenarios, just go a little further out. So that's what I'm going to show you here, and this will be my bull credit example. We'll be short June 16th, 55.50, 53.50 call spread, or rather put spread for 35-cent net credit. All right, now for the bears. Now the bears can anchor a put spread at 59.50. And I was talking about this 55 level, 55.50, which is perfect really when you think about it, because that's kind of what the market's pricing in anyway. Maybe actually the market's a little bit more bearish than that. Market's kind of 54s. But we saw that was bid there last time. So let's just say a retrace there, or retest rather, of that fib. So going along the 59.50 is 245 simultaneously shorting the 55.50 put. You're going to get back $1. So that's 145 is going to be your total outlay. Now here's the fun part. $4 is the difference in the strike prices. Minus that 145 is 255. So you can make 175% on this. And all you need is Ambarella to come down and retest that 55.50 level. Now I'm going to tell you right off, when I see a skew like this, where this put side is paying like 175%, but then the call side that we looked at was paying much less, it actually makes me nervous for these bears, because you're getting compensated for that additional risk. So it kind of makes me wonder a little bit. But nonetheless, the bear debit, I believe, is going long the 59.50, 55.50 put spread for 145 net debit. I think you get aggressive if you're on the put side for sure. Because look at this thing, right? So it's held up at the 38.2. Can easily get down to that 61.8. There is a gap down here. They might defend the gap at 62 if it rallies. So you could say they defend the gap right around 62 on a rally. So let's look at that for the debit side. $62s. So let's look at this going short to 62, 63 call spread. Selling the $62 call is going to get you 180, simultaneously going long. 63s, you're going to get 32. Difference in the strike prices is that $1 holler. So the amount of money you're going to have at risk here is 68 cents. So this gets 47%. So that is bear credit short June 16th. 62, 63 call spread for 32-cent net credit. Okay. All right. Now, I want to go back to this. A -5, a -11, -7, 11, 7, 5. So basically 11 has been the biggest move. So that's like almost $6 on this chart, right? Almost 6. So that puts, let's add what am I adding? 76.4. Or is that 53.30? I know you guys are wondering, Dave, why are you talking about this? Lottos, guys. I'm talking about lottos. Lottos, for sure. 53s. 53.28. So I'm going to be bearish on this one, guys. And I am a little bit nervous because of the way that this options chain is pricing out. I'm going to take note of this, though. When I notice these skews, because I did notice a little bit of a skew here, where pricing just seems a little bit off to me. All right, let's look at this. Skewed. Where am I at? Lottos. Look at the puts. Put side. Oh, yeah. I like these suggestions. They're just seeing the chat. Somebody say, hey, 55 lotto. 55 lotto. Yeah, I think you're saying the lotto's got to break. You know, if it gets really aggressive, it definitely breaks here. Oh, this could be some serious carnage. If they have a bad report, the stock's going to 50. It'll retrace every bit of that, I think. 53s. Because what's all this built on? That's what you got. Like, there was some. What is this rally predicated on? Probably hope for GoPro. What's this gap down? Is that GoPro earning? GoPro had to have reported. So without even knowing, I'm going to pull this up real quick because this is going to bother me. GoPro must have just reported. Did they? Otherwise, what's that gap down? Let's look. No, they didn't report. So what the heck is that gap down for? Any news? News out of them? Anyway, okay, let's go back to the lottos. $55s, 68s. I'd like it to be cheaper. Typically, I like it to be cheaper. I want these to be like under $50. These are supposed to be just throwaways that you just roll the dice on. I like the 55 a little bit better, or the 54. It's supposed to be cheap. You know what we need to do is come up with an actual like parameter for what we're going to do on these lottos and say, okay, I'm going to find one that's under X amount of dollars. Because I've been trying to get them, because my whole thing is it's like if, you know, all heck breaks loose and this thing really does collapse, like what's the unlikely event, right? And the unlikely event is this thing under 53 is really what it is. So I want you to be able to profit handsomely at 53. I don't know. I just like I like that this is cheaper, that the 54 is cheaper. I just do, and it's only $18, but percentage-wise. So I'm going to say Lotto is the 54 put for 50, and of course, guys, David, put the 55 on for sure if that's what you want. Again, I'm trying to make it cheaper, I guess, for the most part. Okay, so there's that. And I don't know that, it was a downgrade. Okay, great. Downgrade that day. Well, so remember, like this is a stock that has just rallied up here for what? They get to downgrade, and then now let's see, this area down here could be in play on a bad report, okay? But, again, I'm making the assumption it's going to be a bad report. And, look, a lot of these tech names have come out and just killed it, okay? Absolutely killed it. So there's no guarantees of that. All right, folks, my trade that pays is the bear debit long. I think I'm not too confident about what's going to happen with Ambarella here. The only thing that's making me a little bit nervous, though, is what I'm seeing in the options chain. That kind of skew in the pricing. I'm a little bit nervous about that. Like somebody knows something I don't know. But we'll see. Okay? That could just be aggressive retail longs heading into the number, and then the smart money's on the put side. You never know. Or it could be the exact opposite, and I'm the dumb money. But we'll see. All right. Yeah. All of these June 16th expiration, Bruno, except for the lotto, which is the front week, because that's what we do with the lotto. Okay. Before I go, Mr. Newman had a question about dollar yen and gold. Now, here's the thing. I think you could tell that I look at this chart every once in a while. Let me extend this. All of a sudden, dollar yen's found itself back in this ugly little trend channel to the downside. And this is just today breaking out. Yeah, Trevor, that's the lotto. Lottos are always long. Lottos are never short. Breaking this 50% fib. This is a big deal. So now, see, this is a little rope-a-dope right here that happened on dollar yen. Broke through the top end of this channel. Rope-a-dope failed. Failed at the 23.6 fib. Then it was in this little consolidation. We're kind of bouncing around. What's going to happen here, right? And I said this could go on for weeks or, whoops, not. Dollar yen is broken to the downside. What does that mean? Now I can erase this risk on that I had here, right? Because now this risk on got a lot smaller and only happened from here. Where's my nice little line? Where's my line? Okay, here we go. To here. And now guess what? It's risk off all over again. So here we are in another leg. Risk off. And you're certainly right, Newman. This was the rope-a-dope to screw over the little guy. Now, I've talked a lot about the correlation between dollar yen and gold prices. Now let's pull up gold. Gold broke higher today, right? And if you notice, this kind of looks like the opposite of that yen chart, right? Yen coming down kind of weird. Gold going up, opposite directions. What do I think here, guys? I think as long as that dollar yen starts to slide, you're going to see the gold trade stronger. The 10-year coming down doesn't help either, okay? So all of this is very bullish for gold, which, in fact, Mr. Newman, bullish for your GDX, bullish for your GDXJ. So if you guys want to see something, this is like a bonus. This is like an overtime bonus. GDXJ, I'm a madman here, guys. Junior gold miners. Don't forget, there's triple levered things on this, right? The J-Nugs and whatever, all those crazy ones. 3 days till expiration. Don't do that one. That's too soon. Look at a week out. 33. 35s. Going along a 33.35 call spread right here. 92 cents is what the $33 call is going to cost you. Actually, you could just go along this 33 call, guys. But if you want to get cute with it, simultaneously sell the 35, you're going to get 26 back. $66. That means you can triple up if GDX gets over 35. So that's a long 33.35 call spread June 16th on GDXJ. The junior gold miners, which are on the move. And with that dollar-yen pair doing this, and it just broke through this technical level, this one's coming down. So yes, I'm going to say bonus bucks, long June 16th, GDXJ 33.35 call spread for 60, what was it? 66, 67 cents? I already forgot. 66 cents. Net debit. Okay. There we go, guys. This is going to continue to fall apart here. I hope that would put gold prices continuing on the move and the GDX on the move. Plus your J-Nugs. Going along J-Nug wouldn't be a bad idea here. Does J-Nug? I know, guys, this is like crack. This is why people like me shouldn't have access to computers. You're right, they got J-Nug. Triple levered. Look, these guys are up 12% today. 616. You could spend $1.45 on this $19 call right now. It's madness. This is madness. This is Sparta. This thing's already up $2 today. I think this continues to go. This could be a crazy sort of trade. If you got $145 to roll the dice on. Another here, let's say, I'll give you a lotto is long June 16th, J-Nug. But Newman, you could do the same. Look, if they're too expensive, you put on a call spread, right? So you go long the 19. You say they're too expensive, so then why not just short the 22? That's how you get your money back on those, right? Same sort of thing. Not even 19. I think you got to go further out. And you can get some of your money back. You go to 23. That's going to be 115. And you got 4 that you can make. So something like that. The other thing you can do, if you think they're too expensive, how about selling out of the money put spreads on this? Sell out of the money put spreads. Not that one. That one's ugly. But there's got to be some, and we're doing this kind of off the cuff, randomly. But even if you go at the money, look at this one, the 19-18 put spread. Look at this. Yeah, this is on J-Nug. I know this is madness. I shouldn't even be talking about this. But guys, you got to look for stuff like this. If you went short the $19 put, you got 145. Simultaneously going along the $18 put is 98 cents. So your net credit is 47 cents. Okay? Amount of money you're going to have at risk is 53 cents. Because the different strike price is only $1. So it's an 88% rate of return here. All you need is J-Nug to stay above $19 between now and expiration, which is a week away. And let's see if that is even available here just in a couple of days. No, it's not as nice there. But there you go. So you got to look for stuff like this. And granted, you may not get filled there because the spread is kind of wide. All right, spread, that's not too wide though. They might take care of you. So that's the kind of stuff you got to look for. This is June 16th. It's just a day, a week and a half out. And all you need is J-Nug to kind of hold in there above 19. And if gold continues to move, this thing's going to keep on creeping higher. So that's not a bad idea either. So, all right. Now that the total degenerate gambling play is out of the way, it's not actually degenerate gambling. I mean, this is calculated risk, right? But that's what you're here for on Live Trader. You get all sorts of ideas. So anyway, back to Ambarella. I'm bearish on it. So, again, guys, thank you so much for hanging out with me here on Zach's Live Trader. Shoot me your recommendations for, well, maybe a Friday thing that we could do, or Thursday, and then, of course, next week. So, livetrader@zax.com. Tomorrow morning, we're going to do the morning after. So we're going to see Ambarella. We're all going to see what happens to Dave and Buster's, right? What do you want me to look at play for? We did play yesterday. They're reporting after the bell today. So we're going to do the morning after tomorrow morning, talk all about what the earnings had to say, and go from there. So, again, thank you so much for hanging out with me at Zach's Live Trader, and I will see you all mañana. Don't forget about the chat room. See ya.